So, what is the pump and dump case that recently many of the YouTubers and stock market experts and the Bollywood celebrity Arshad Varsi and his wife were involved in? A pump and dump means that a group of people, it can be anybody who has a big following, tell their people to buy a certain stock. They create this very big hype of the stock that it will go up and up, so that they tell them to buy huge amounts, which helps increase the stock price on a stock exchange. When you buy a certain stock in huge amounts, the stock price rises. So when this actually happened, it pumped the price. And when the stock price was overvalued, that it reached a point where the price was at an all-time high, these same people who told their own followers or fans to buy these shares, these people sold those shares because they were already holding these shares at a very low price. So when the price rose and it reached an unimaginable price, they sold it to make unimaginable profits, which is why it is called pump, that is raise the price, and dump, that is immediately sell all the shares. The SVB and the Signature Bank collapse has been the biggest US bank collapse since 2008. Now, what caused this SVB bank collapse is that the SVB bank had announced to raise capital to the extent of $1.75 billion. Now, this caused panic among the depositors and the investors, thinking that SVB bank is not stable. They thought that it is cash strapped. Now, this made the depositors go to the banks and withdraw all their deposits. And simultaneously, on the stock exchange, the SVB stock price dropped 60% because of this news. Now, depositors withdrawing their money and stock price plummeting both caused the biggest collapse of SVB Bank. Now, this same news spread to Signature Bank depositors, which caused the depositors of Signature Bank to fear about their deposits. The same thing happened there. The depositors withdrew their money, which caused a big collapse in Signature Bank as well. Now, the Indian bank's exposure to SVB and Signature Bank is very less, and hence RBI and the Indian government have told the Indian citizens not to worry about Indian banks being affected by this collapse. Some of the Indian companies that had fundings from SVB Bank may be affected because now SVB will try to withdraw their funding which they had done in the Indian startups or the Indian companies, which is estimated to be around 2.5 to 3 billion dollars. Recently, the gold prices in India has reached 60,000 rupees per 10 grams. Now, there are multiple reasons for this increase, and the major reason for that is the recent bank crises that have been happening in the foreign markets. People have stopped trusting the US banks because of the stability and because of the withdrawals that they recently did in those banks. They started to buy gold. Now, India is a big importer of gold. They import gold from various foreign countries. So, if the gold price increases in the US, for example, then the gold also increases in India. Another reason is that the interest rate has been increasing every month now. Even in the foreign markets, even in India, the interest rate banks have been rapidly increasing to control the inflation in the market. So people are finding alternatives to purchase or to make a good investment apart from keeping their money in the banks. Third and the final reason is that gold has been a very good alternative investment opportunity because it has been growing very consistently and significantly, and the appreciation from the beginning till now is almost 88%. So these must be the reasons for the recent all-time high touching of gold prices. So Adani shares have fallen in the past 3 sessions. Now this comes after a total rally of almost 1 month. Adani Green started to rise on the 28th of February, and it was just 2 days ago that it started to fall. Now, what are the reasons behind the Adani shares to fall again? Number one is that the Adani shares have been rising constantly for the past month. So, people have started to book their profits. People who had bought early have made enough profit. So, now it is a sell game totally to make their profits. Number 2, recently in the news, Adani Group said that they need an extension regarding the repayment of loan for ACC and Ambuja Cements. Now, this news created certain fear among the investors. And number 3 is that the political issue that has been going on in the parliament, where some parties are constantly asking where did Adani get the money from. So, this is causing fear and panic among the investors. Even 1% negative news plays a small role but has a big impact on the Adani share prices. There is a feature called the green shoe option, which is used by companies in their initial public offer or in an IPO. Now, the green shoe issue is used when the demand for the IPO over exceeds the actual allotment made for the IPO. If the number of applicants on day one is very high, then the company has an option called the green shoe option to increase the number of shares allotted to the public. For example, if a company is issuing 1 crore shares originally and the demand for that company's shares on day one suppose reaches 10 times or even 15 times, then the company has an option where they can increase the number of shares to be allotted to the public by 15%, which comes to 15 lakh shares. So, up to 15 lakh shares, they can allot more shares to the public. This name Green Shoe comes from the first company in 1919, where a company called the Green Shoe Manufacturing Trading Company first used this option for allotting more shares than the original allotment. The meaning of hedging is reducing your losses by taking two counteractive positions in the stock market. Mainly, people do this because the big time investors who trade in lakhs and crore rupees cannot take the chance of going in a loss. So they take one position, which is either a buy or a sell, and they counter it with another position, which is opposite to the one they previously took, which reduces the loss if they go in the loss. For example, if you buy shares of a certain company, you take a sell position. So if the price does go down and you go in a loss in the first position, that is buying the shares position, you will have a profit in the second position that you took later on. Hence, the total of both these positions either lands you in a good profit or reduces the maximum loss that you would have occurred if you only took one position. The meaning of front running is that you are the leader of a group of people and you have inside information about a certain company, and you only buy the shares of that company knowing the secret information, because once the information is made public, the shares price of that company may go up. So you hold shares at a very low price just before the news is made public to make unlawful gains from that news. The same happened with the Axis Mutual Fund. The chief dealer and his associates of Axis Mutual Fund had multiple stockbrokers with him who had many accounts. They also used trading accounts of people who are not have been operating the account or that have been lying idle for many years. The chief dealer and his group of people used to hold a share of a certain company before the mutual fund invested crores and crores of rupees in that share, which caused the share price to rise up. Hence, these group of people made huge amount of profit just by waiting for the stock price to rise. Hence, SEBI banned the chief dealer and his associates from entering the capital markets.